IPFS shouldn't be a payments company. They're a premium finance company. They should be focused on building the best loan management systems and service infrastructure for premium finance in the world. That's their focus. If you had the ability to move money automatically to the agent, so we don't have to deal with it, but yet we could distribute the payments out to the payment link out to the insured, and you can move the money for us. We're in 3 to 4 different places. We're on board.
Every single time I go to a store online to shop and it's powered by Shopify with Shop Payments is an option, it's automatically going to prompt me to log into my Shop account.
Today, you see a lot of premium finance integrations with payments companies, and that's just it. It's just an integration. You know that Visa says, hey, you merchant, you agency, you're technically not supposed to surcharge more than 3%. Premium financing may happen 30% of your agency bill. That's a part of an overall larger wallet.
But I'm here to tell you, man, like I'm at a point where I don't want to put business with anybody that I can't have an electronic experience with 100%. It's a nightmare.
So we just opened up both doors, one on the and done side, one on the IPFS side, and doing all things payments and premium financing. Platform that has the ability to connect carrier APIs and either provide brokers a digital platform, or either just be the API layer between the carrier and the broker's platform. But essentially, they're bringing their own payment solution with them. Now, the carriers, different story. There's a lot of folks, a lot of carriers that have their own interest in payment processing, and so there's a lot of policies. They're not going to say we're not going to allow agency bill for this, which we like to think that.
Hey, everybody, welcome to the Power Producers Podcast, where we are refining and redefining the sales game. And today we have one of my favorite people in the entire insurance industry and otherwise, Mr. Chase Courtney from IPFS. I don't even know what the guy's title is anymore, man. He's always just going to be Chase to me, just like I'm David to him. We don't pay attention to those trivial pieces of information, but I'll let him introduce himself here in a second. We're going to talk about a lot of the stuff that they have going on, and it's just changing ever so quickly. Probably not by Chase's standards, not fast enough, but lots of stuff going on, and I wanted to sort of get into that today and talk about what you've got that's already out, what you've got on the roadmap, and get agents, just to get them exposed to that, because I think there's one thing we can agree on over the years. They didn't really get exposed to this stuff in real time, or even after the fact for that matter. There's a lot of secrets about what IPFS was able to do in an agency through nobody's fault, really, other than the fact the messaging just wasn't there, and we're going to do our best to get it there. So let's talk about a little bit about what you got cooking, man. You're the one with that Cajun witchcraft you've got brewing in the swamps of the bayou down there. But before we get into all that, just real quick, what is your role? It used to be software integration and sales or something like that, right?
Yeah, it's fun. Yeah, so to answer your question first, it's director of technology sales. But I had to. We have to give this internal training, and all the leaders of the different groups come down and have to give a spiel of what their group does, and even our education team, they haven't been able to get my title right in the 2.5 years, almost 3 I've been here. Yeah, director of technology sales, but what I do,
I think part of the reason is because that role does not sound a thing like what you actually do. Like
right.
You have your hands in so many different things. That's a really bland title.
Well, and it was purposely so, because that was really it. It was how do we? All right, it's things have shifted over the years, but it was how do we better sell technology? And then all of a sudden, then it kind of segued into me leading our product team for IPFS, to which then, which we're going to talk about today. My main role is leading all the business and sales initiatives for our payments company, and done. And you hit the nail on the head as it relates to. We do not get the messaging out very well in terms of what we're doing. Now, in the case of and done, that there's been a little bit more purpose to that. Now we're ready to spread the word about what we've been doing in the world of pure payments as it relates to the and done brand, which we'll get into that today. But yeah, I have an ever-changing title. It's wherever the team needs me, like the Ben Zobrist of. What's a good utility player?
I miss
what an amazing reference.
I miss Zobrilla, man.
To a deep cut.
As we both have Rays hats on.
Yeah, I had to play to that.
By the way, whoever came up with this they need a promotion, a raise, whatever. They're the sickest design that I mean,
Couldn't
to
agree more.
incorporate the skyline in there, like, I mean, or
Yeah, so
I'm
what
sorry,
they
the
changed,
Skyway.
what they did, they made the new, that city, whatever, the city something logo, and that's
So
the
sick.
Skyway, but
That's
they
so
made it
sick.
look like a ray.
That's so sick.
Yeah, I was disappointed they didn't have more snapbacks at the merch store, man. They were all like fitted and they just don't look the same on my big head. So
Can we get something out of the way real quick? Was your wife
yeah.
with you at the Rays game yesterday on
Oh
Mother's
yeah.
Day?
Yeah, yeah. It was her idea. We were going to go out on the boat, but it was too windy. We were going to go out on the
Okay.
boat with like her mom and parents or whatever. So we all ended up going to the Rays game instead. And it was definitely better than being out stuck on a boat. I mean, the boat is cool, right? But like when you've got kids, it's a different story, man. I mean, you're
Oh,
sitting
yeah.
there, you're trapped. Like I love going on the boat, do a little bit of fishing, inshore stuff, but it's like with the kid, man, if it
Well,
like
what kind
you
of
can't.
boating is this? Is this what we parking at a sandbar? Or are we
Yeah,
fishing?
yeah, yeah. Nothing. I mean, we're not. No, like, I mean, they just got a new boat. I mean, her parents. I haven't even seen it. Apparently, it's legit. But we would have just been kind of cruising around, doing a little inshore fishing and all that. But I mean, to be able to go and sit in the AC, even though the Rays got drummed, was still a better option for me.
Yeah. Well, I got to address something on the Delaware. So my oldest is obsessed with baseball, and he's also just obsessed with sports. So he'll go to Alexa and just say, play the whatever team song. And somehow one day he figured out that he said, play the Devil Rays song, and this a rock song comes on. Devil Rays, like hardcore, and you're probably back from like when the franchise just got started. And they probably don't even play it any longer.
Sounds like a WWE walkout song.
I'm gonna
Exactly,
have to search
exactly what it
this.
is. Yeah. So for some reason, we now have a Devil Rays tie-in into my household thanks to Alexa. So
I thought
Love
you
it.
were going to tell me it was like the violin beginning of that tantric song Evan Longoria used to walk out.
Yeah, that went pretty hard. I
well,
wouldn't mind seeing him. Is he still on the Giants? I wouldn't mind seeing him retire as a Ray.
No, he was with I don't know if he's there this year or not, but last year he was over at Arizona. Is Longoria, where is he? Oh, he retired, man.
I knew it was coming soon. I mean, he was young and that was in 2008, 9.
Yeah.
But
Oh well. That ain't helping chase his cause any.
no.
Talk about Ed
no.
Gunn, man.
That hat
I mean,
is though. That's a good gift for my kid though. I like that. Sick hat though. I will. Yeah.
yeah,
Thanks.
but I mean, I think it's important. Like, why don't you set the groundwork? Because I don't want people to get confused.
Yeah.
And I think they can easily get confused for a variety
Absolutely.
of reasons, not the least of which would be you've got some moving pieces here. IPFS, Imperial Premium Financing Services, is kind of the legacy player, right? This is standard premium financing, with the ability to pay the market on our behalf through a premium finance agreement while returning our commissions to us so that we don't have to handle any of the trust accounting stuff on that side of the house, unless for the time being, it's a paid in full solution, in which case we handle it normally. But for all practical purposes, you guys take the agency bill out of agency with that product alone. But you've made this shift to handle actual payment processing too, because there's a lot of people who are out there that don't necessarily need the premium finance option, because a lot of their stuff is just, how do I take this payment? How do I take this payment and keep moving as quickly as I can? And then there's people like us who kind of need both. So why don't we set the table that way first, and then we can kind of walk into the roadmap of what's happening now and what's yet going to happen here over the next little bit. Because I mean, I'm privy to some of this stuff just from sitting on the technology advisory board with you guys. I don't want to open my mouth and say anything I'm not supposed to. That's why I keep kicking the ball back over to your side of the court.
Yeah, no. Yeah, it's easy to get confused, especially when dealing with two different brands, and technically two separate companies. But here's the story. About 3 years ago, IPFS created And Done. And that was on purpose because they were tired of dealing with third-party payment processing companies. It was a bad service experience. Now, for people who don't know out there, I mean, IPFS is the largest premium finance company in North America. 700 people work. It's a behemoth, right? It is, and ever since of the phrase, long, big ship, small rudder sometimes. And I mean, but we've seen that model replicate over banking, think of the large banks, right? But IPFS needed really a conduit to innovation as it relates to payments. What IPFS didn't want to do either is get caught into the middle of trying to be a premium financing company that's being a payments company. But, and again, when we created And Done, we didn't want to be a payments company trying to be a premium finance company. So IPFS creates And Done. And really the original intent was, hey, let's just consolidate our service infrastructure. Let's make it a better service experience. Let's have control and visibility of all the downs, all the installments that run through our rails. Okay, and in doing that, we saw the opportunity to bring additional payment solutions to the market. Well, if we're already processing the billions through this payment infrastructure, who's to say that we shouldn't be one of the top payment companies in the market, right? We have, a 700-person infrastructure to rely, to lean on, ample resources, and we've built this really complex, reliable infrastructure. Well, lo and behold, we said, okay, let's bring these payment solutions slowly to market. So we started to actually, in the background, started to build a new payments platform, because the concept of having a premium finance platform that does payments and having a payments platform that does premium finances seems very small in terms of, different, okay, well, what's the difference? But it's actually huge, right? Where do you want to start your experience from? So, David, you said it. If you look at Reagan's consulting best practice data and you just go talk to agents, how much agency bill do you do? Okay, let's just call it on average, 25% of, everything runs through my agency is agency bill. Okay, well, of that percentage, how much of that is premium finance? And a lot of people will say 25 to 30% of that is premium finance. And so the majority of everything that I'm handling is going to be a pay in full. So why not have a payments platform that does premium financing? But then again, we have customers that do, 100% of their agency bill will always include a premium finance option to it. Well, that's fine. Now you have a premium finance system that has the ability to tack on a pay in full option when you need it. So it's really meeting the market where people want to work, right? And in the way that they want to be met. So then, as we created And Done, we've slowly been doing this in the background, because the whole, like I said it earlier, the strategy was we don't want to be caught in the middle. IPFS shouldn't be a payments company. They're a premium finance company. They should be focused on building the best loan management systems and service infrastructure for premium finance in the world. That's their focus. And Done, now we have 90 developers that build nothing but payment solutions today, and not just to address, agency needs as well, but also to replace Stripe, to replace PayPal, Authorize.net, to meet the market, I would say upstream at, the wholesaler carrier level, at the, at a platform level. So it really is, how do we address all segments of the market, do so in a strategic way, but be able to focus on our core competency, which is payments on the And Done, and then we'll do a deep integration for IPFS, and then their loan management systems could be the back end and handle all the premium financing. But again, it's been this delicate balance of, we don't want to get caught in the middle. We want to be the best at both competencies. So how do you create two different companies that can do that?
I think I stopped listening after I heard you say you have 90 developers working on nothing but payment processing. That's insane, man. How in the world do you keep those people straight?
We have an entire payments roadmap that is, like I said, And Done is a payments company that we are now going to market separately. We have signed on, official resellers of And Done payment processing. We are now partnering with, look at aggregators, associations. Again, it is now taken off into this separate brand. We have a separate branding strategy. So if we're going to be and aspire to be the best payments company in the insurance industry and the biggest, we have to have a dedicated team that's focused solely on building payments, but having the unique capability of having that. I think of almost like Apple and Android, right? In terms of this vertical integration into premium financing, which premium financing is so core to what this industry needs, but we're able to bring it to, through these other unique channels, and which I can get into here in a minute, and how we do that with platforms in terms of embedding premium financing into a platform. That hasn't been done yet. We're able to do so just like embedding a Stripe component. We can embed premium finance now in there, not a redirect. We're talking about a fully hosted embedded experience.
Interesting.
So
Let's
yeah,
good segue. Yeah, let's talk about it, man. I want to hear about that.
well, so as I said, like and done, we've had this strategy of okay, well, again, you never want to get caught in the middle when building this brand and building a company. And we've always played this fine line of we've had to play catch up too, mind you. We've had some companies out there and our competitors out there who've had 8, 9 year head start in the payments game. But I can say that we've closed the gap tremendously in about a year and a half. And again, we've been building a very solid customer base that, A, has allowed us, to get the word out, but B, is giving us that necessary feedback to really make sure that we have a shored up product before we go to market and declare that we're the greatest thing since sliced bread. What I continue to see have seen in the market is fantastic marketing schemes, but then people being underwhelmed by a product when they get to the table. And that's something we sort of had the luxury of not having to do, because we don't, I mean, again, we want our first impression of our brand to be, this is where we aspire to go. Here's where we're at. We obviously can bring value to you now, but here's the additional value we're going to continue to bring, and there's no end in sight. I'd rather come from that angle to say, we've got everything you need, come to us. And then all of a sudden it's slightly underwhelming. So with and done, that's where we've been. So that's why we've kind of been in the shadows of building building this, like I said, this customer base to where we've had what we think is an industry leading product, and we're there, right? We're pretty excited. We have some new features that we're about to release. So one of which is there's no payments platform right now that is truly integrated with a premium financing company. And what I mean by that is one consolidated service infrastructure, but also have the ability to quote out of the payments platform, right? So today you see a lot of premium finance integrations with payments companies, and that's just it. It's just an integration. But our platform, think of bringing all of that IPFS quoting goodness into the payments platform and having that same capability that lives there. But then also imagine when something, you have a question about a down, you have a question about an installment, you pick up the phone one time to talk to one person to figure out exactly where that payment is. And again, completely vertically integrated. Not, okay, well, you're the payment company, but you're actually using this third party as a payment processor, and you're integrated with this premium financing company here. So do I need to call you, the payment processor, or the premium finance company? And then that premium finance company may have a third party payment processor. So we've now introduced 4 different parties in here.
Mm-hmm.
And so that's all. Like I said, our strategy is to keep a consistent infrastructure all the way through. Now, where the opportunities we're seeing and what we're seeing in the market right now, and you've been seeing the advertisement of some of our competitors, premium finance integration, bring it all into one, right? It's this concept that happened in fintech like 10 years ago, right? This modular ecosystem, specialized players, integrating into where people want to actually work. So I think what the premium financing companies have to really understand is that they're part of a larger wallet, right? As I said it before, premium financing may happen 30% of your agency bill. That's a part of an overall larger wallet. So what we're positioning ourselves is we need to make sure that we have the API capabilities to be where people want to use premium financing. And then furthermore, what better way to do that than build your own payments platform that can build it all in one infrastructure and have specialized capabilities there that you're not offering to other third-party players.
Probably higher than that number in Florida, I would think, depending on what the agency's going after. I mean, just based on the market down here, especially with property, man, it's nuts. But I just from the outside looking in, because I don't get super involved in any of the payment stuff, which is a good thing. But everything has been so much easier from my perspective since we started, using you guys, and they can have the option to go in and click on, pay in full, do payments, and do it all themselves. Again, I'm not super involved in it on a daily basis, but from what I've seen,
no, it makes life a lot easier.
Much better place than we were prior to.
That gets back into the point though, like, right. So yeah, you're absolutely right. Florida, Louisiana, right. You may be doing premium financing, 90, like I said, 90% of your agency bill is premium finance. But again, that therein lies with IPFS of having that cross-sale strategy of, oh, you want a premium finance platform that does pay in fulls. Here you go. We have customers that run 6,000 transactions a month, payments. We were replacing Stripe, PayPal, and may do 3 or 4 premium finance agreements, right? They need a full-blown payments platform. Whereas to your point, we have agencies that are down, where most of it's premium finance, and they live and breathe out of their premium finance system, but they still have the ease of which to offer pay in full options.
Mm-hmm.
Well, I think there's another spoke too, and I'll be interested to hear. I don't want to put you on the spot, so if you need to punt on this, you can punt on it. But I think that the user experience that most agencies have with wholesalers is another area where if they're not up to speed on technology, it becomes an absolute nightmare. I mean, we've got everything from places where I can go and put a login and it's going to automatically populate whatever we have outstanding for that wholesaler. And I can click a few buttons and then enter my information and pay all of them at one time.
Right.
And then I got people who still send mail out
Letters.
invoices.
Yeah.
There's no way to access your information online. And to me, like I feel like we've done a great job of keeping up with everything on the agency side. I feel like on the wholesaler side, though, a lot of that just hasn't necessarily been addressed. Not due to the issues with the technology companies. I think the wholesalers have to want it first, and they have to want it because we gripe about it. But I'm here to tell you, man, like I'm at a point where I don't want to put business with anybody that I can't have an electronic experience with 100%. It's a nightmare.
Yeah. It's so interesting you bring this up. I mean, this was a hot topic actually last week. I had a great call with an MGA up in Jacksonville, actually, down the road from y'all, and about an hour and a half. And just, there's certain insights that you get that I thought was interesting. But at the end of the day, look, to your point, two things. One of which, on the premium finance side, I'll speak to the IPFS side. It should really be about the ease of distribution of a digital experience to execute premium financing. In other words, how easy can I get a link to an agent if they don't have their own premium finance program to be able to for them to pass on to the insured, right? And then you have the whole concept of, from a payments perspective, of how do you solve money movement? Because to your point, you just described an agency build process with an MGA. It's the easiest, it's the path of least resistance for them because they don't have to mess with, you can collect your commission, David, and they don't have to mess with funding the retail commission. They can just bill you and collect the net. Versus, if an MGA was able to do more direct to insured, maybe some agents don't like that, but if you could facilitate an experience where they go direct to the insured, from a billing component and be able to automatically fund your commission, David, and then they're able to take in the amount of money, move that money where it needs to go, and just automatically, seamlessly after one payment. That's something that really hasn't still been solved. I mean, there's a lot of complexities to that. When you talk to MGAs, they say, well, some of our agents really, want to handle the collection. But if you had the ability to move money automatically to the agent, so we don't have to deal with it, but yet we could distribute the payments out to the payment link out to the insured, and you can move the money for us. We're in 3 to 4 different places. We're on board, but nobody solved it. Now you're getting some insight to where we really want to go. But then we have talked to MGAs where they said that's an E&O exposure to them as well as collecting money from the insured. So, as we continue to move upstream to MGAs and carriers to see like what do they want from a payments perspective, it gets pretty interesting. But I can tell you that we're intent on trying to solve this for the industry, and we have identified the basic building blocks that we need to be able to solve it that are currently in flight, which automatic money movement within a singular infrastructure. All right, anybody can tack on third-party money movers, but the infrastructure thing becomes an issue, as well as being able to seamlessly integrate premium financing into that piece.
Yeah, I think to the average agent, we don't understand like all the red tape you have to go through either. Like there's a lot of regulations and things like that, especially when it comes to moving money around that you guys have to adhere to. It sounds intuitively to us, it sounds easy to say, well, why can't you just pay the carrier on full pay and send us our commission just like you do on the premium finance piece. But speak to that a little bit, man, because you got to jump through some hoops in order to make that happen. It's not as simple as just deciding you're going to do it and doing it.
Absolutely. Yeah. So there's federal money transmission laws. So in terms of just basically, you can't pick up money twice from a pay in full perspective. Now, premium financing is a whole different animal, right? So when you're signing a PFA, essentially we're moving that through, there's third party banks involved. You're getting this power of attorney in that PFA. Like if you just know the ins and out of what a PFA does, it allows us to not really abide by those money transmission laws. Now, handling payments and paying fulls, that's a different story. Now, when you're in the business of, depositing money, then taking money out of that, place where you deposit and moving it somewhere else, you're bound by federal money transmission laws. Now, there are ways to do that with like FBO. Okay, there's certain ways to, I don't want to say get around because that sounds sketchy. I mean, there are legal ways to be able to do this, and there's a way to build your infrastructure, whether that's pre-funding amounts, secured by incoming deposits. I mean, but there's a lot, there's a lot of bankers and a lot of lawyers that get involved when it says, okay, you want to move money, pay in fulls. We got to, seamlessly set up a structure here that's going to allow you to do that without you being bound by these, like I said, without you having to be actually a federal money transmitter, which that's a very, very expensive endeavor to be a federal money transmitter. Now you can hire third-party federal money transmitters and integrate into them. There's pros and cons to it. We see a lot of the cons being, again, you lose control of that infrastructure, and we've seen what that's like, and we hear what that's like because we know some people who are doing it that way, and then we hear, yeah, we don't know where the I called them, they had to call somebody else, and they had to call somebody else, and we have no idea where the money is, and that's what we want to avoid. So yeah, it is a ton of hoops that we have to jump through, but I can tell you we're intent on solving it for the industry, and then once we get those the basic building blocks in place, then it's really starting to work through those use cases, and how do we solve this, not just from an agency perspective, but at the MGA level, and then eventually the carriers. Now the carriers, different story. There's a lot of carriers that have their own interest in payment processing, and so there's a lot of policies they're not going to say we're not going to allow agency bill for this, which we like to think that. We think they want to make money too off the payment processing as well too. So we've actually had some discussions with some very large carriers and allowing us to go the agency bill route, but we had to jump through some hoops to be able to do that.
Well, I imagine, I didn't realize it until I started putting the pencil to the paper. But if you start thinking about massive amounts of money, use ADP, for example, on payroll, the amount of money that they can make on the float by just only holding that money for like 2 or 3 days at a fraction of a percentage, the volume of transactions that go through, they make a ton of money. I can't imagine the insurance companies aren't in the same boat, right?
Absolutely.
They don't want to give up that float to somebody else if they can keep it in-house.
Yeah, and that's relatively like that was once in vogue, out of vogue because of the interest rate environment. Now we're back in vogue, right? So we're talking to our customers too that probably 4 years ago would have said, yeah, no problem, move it for us. We don't need to hold on to this money. Who are now saying, no, we may want to take part in this float a little bit now in this interest rate environment. So that's just, you're right. That's another element that we're looking at in terms of if going to market and being able to do this, are some of the bigger customers going to want to do this? Who's going to want to who's going to want to float and who's not going who's going to want to avoid it?
And I'm not saying that it's right or wrong to do it. I'm just saying that's how the math works, man. If you're a business owner and you're having you're doing your payroll in house, or even if you're using a payroll company for that matter, you usually have to have your payroll released like 4 or 5 days in advance so that they can draft your account. Then it sits there, and it's probably sitting there for like a good 2 or 3 days before it funds. We don't think about that. But when you have tens, if not hundreds of millions of dollars of transactions that you have sitting there for that amount of time, you can make a chunk of change relatively quickly. And again, we don't think about that because I don't have that kind of money, man. I ain't playing the float on 350.
Well,
you know what I'm saying?
Right. Well, and that's like, and for the most part, I would say like people are seeing that, the efficiency gained and me not having to have resources, move this money around. Like for the most part, people see that's the benefit over the float. But there is a certain threshold for sure where that comes into play and that's what we're trying to monitor and try to better understand. Obviously, there's always changing economic factors with that. But yeah, I mean, really, like I said, and Dunn is really just taking advantage and being able in a strategic way, being able just to, how do we tackle the payments industry without being caught up and trying to be a jack of all trades, because again, if I will say this, if IPFS tries to handle being a payments company, now you have conflict of interest with, things getting in the way of making what makes them the best premium finance company. And so we've been able just to split that out. And again, we're being very diligent about what we saw. We do have that luxury of having the network, but that's our intent. Our intent is not to be this marketing behemoth at this point. It's to solve industry problems and solve them right, and then go to market and making sure that we're truly adding value.
So now I'm gonna be devil's advocate here.
All right.
And I know that if I was developing a payments platform,
mm-hmm.
and I had basically a captive audience of insurance agencies who have a whole lot of clients on the commercial side that need payments, that I would be looking for a way to have agencies distribute my product to their clients for a little bit of incremental revenue. And I wouldn't even need a sales force for Andon.
That's, boy, I was saying that the other day. What's better than you selling, me selling Andon is having other people sell it for you. So I'm glad you said that. So yeah, we have resellers today. I mean, that was a huge, so not only taking Andon to markets as a separate brand, but then coming up with what we call our Andon Ally strategy, which is how do we enable partner vendors and then other reseller relationships to go out and sell Andon payment processing on our behalf. And there's obviously, that's what I love about insurance. I mean, just the number of distribution channels that can do that. An MGA that wants to resell to their retail network, absolutely. An insurance association, aggregators. I mean, it could be anybody really that has a captive audience. So that's, yeah, there is an opportunity today, and we've just embarked on that journey with a couple relationships. More of the interesting ones are these InsurTech platforms. So we've secured a reseller agreement with an insurance infrastructure as a service. So a platform that has the ability to connect carrier APIs into and either provide brokers a digital platform, or either just be the API layer between the carrier and the brokers platform. But essentially they're bringing their own payment solution with them. And then with that, kind of segues into our embedded premium finance. So what Andon does is just expand the sales channel for IPFS. And so think of like Stripe, think of like checking out on any website, and you never leave that hosted URL. Well, obviously we have those hosted payment solutions that you could just put right there on anybody's third-party site or platform. But we also have the ability, like think of buy now, pay later, just like now the buy now, pay later experience. We're doing that with premium finance today, where it's a completely contained checkout. It's never any redirects, e-signature, down payment, recurring, everything executed in one experience without ever leaving the third party's site. And again, we've just been able to expand that sales channel on where premium finance can go. I'm talking to big MGUs right now who are like, we've been thinking about how premium finance would work in this model forever with all these like programs that we work with. We're building our own platform, payments and billing platform. We need, a payment company. First, we need, sexy payments technology. And then, wait a minute, you could turn on a button and premium finance comes along with it. So it is.
Well, I mean, look, man, you're seeing so much different stuff embedded at checkout now. It's crazy because, I mean, to your point, you can pay cash, you can pay over time. And the merchants have figured out on this too. These are people whose financial minds are way more. They're like you, Chase. They're just way smarter than I am with the numbers on it. But I mean,
Yeah.
I look at it from like even Peloton standpoint. I think they were one of the first ones that I've seen do this, where you can pay me now, or we'll give you interest free for 12 or 24 months if you want to spread it out. I still haven't figured out how they're making their money, but if you're going to give me a chance to leave that money for my own use for 24 months and I'm not having to pay you for the
Yep.
use of my money, I'm going to spread it out into payments every time, which is why my whole freaking garage is loaded with Peloton equipment at this point. So obviously, they
I mean,
made
is that just it though? Like, I mean, because I'm with you. I don't see what the thought process behind that would be. Like, is it just to gain, maybe some more users that would not be able to pay in full for something and want to spread it out, or so that you can buy more gear like you're talking about? Super familiar with Peloton. I have a general understanding, but I assume that there's like other things that you can buy aside from just the bike.
Well, yeah. So I got the bike, we've got the tread, we've got the rower. I also, by the
Oh,
way,
they make all that stuff.
Oh,
yeah,
yeah.
in an
Okay.
unbelievably glorious move, got my wife Fight Camp for Mother's Day. Awesome.
Okay.
Awesome Mother's Day gift.
What's the first rule about fight camp?
Yeah, looking
That's fair.
forward to setting it up for her in the garage. But anyhow,
Hilarious.
it's interesting, man, because I feel like it's not limited to Peloton. So I don't want to use them as the only example, but I feel like part of the reason is to get you into their ecosystem and onto their recurring monthlies too, because they're real profits in the software. You're only going to make so much margin on the durable goods when people buy them. And at some point, those will wear out and they'll have to replace them. And maybe charging retail price with the assumed margin is beneficial to them to keep production up and get those things warehoused. Let somebody else take the credit risk like a firm, and then get that 39 or 49 recurring coming in from more people across more pieces of equipment over time. I don't know, man. It doesn't make sense to me. It's what I said. People a lot smarter than me have figured it out, but there's got to be something with, the analysis has to be, we're not losing that much money by putting this equipment out there, but I mean, somebody's getting paid because a firm ain't taking credit risk for free. So it's got to be a back end deal that they've got with Peloton, and maybe Peloton just looked at it and I don't know, Chase, you tell me how it works.
Yeah. So that's it. So actually the buy now, pay later models are, I believe, I can't remember which one is which one, one of them is actually, there is an interest component to it, and probably not. I don't think
a firm has an interest component, but only with certain vendors, right? So Peloton, they don't charge it, or they may give you 12 months interest free, but if you want to spread it to 24 or 36, there's an interest charge involved with it.
But this is, I mean, think about it. This is no different than deferred installments on a carrier side. I mean, it's literally no. I mean, I mean, we're talking about the same thing here. It's like, well, okay, I can just spread out this premium 12. So you carrier, you're going to allow me just to do this on a monthly, and that's just what my monthly. I mean, that cost. I mean, they are taking on that cost in order to help with distribution and sales. I mean, so there is a cost related to the servicing of that fee. So that those costs are built in either into the product or they've which talk about costs built in the product. You want to see me get on a soapbox? I'm talking about like the insurance industry. All right, here, what's crazy? How is it that the laws haven't changed? So think about it, like digital payment processing. There's actually a rule, and Visa's been challenged on this, and there's a number of antitrust lawsuits out with Visa. But that Visa says, hey, you merchant, you agency, you're technically not supposed to surcharge more than 3% to the insured. So what Visa is ultimately, or any cards have been saying is, hey, look, we're going to take 20% of your commission because this is a necessary cost, but it's got the 20% of it. It's going to come out of your commission at the rate of 20%. We're going to keep increasing our costs, but we can only allow you to pay so much. And if you look at like laws as well too, which is really interesting, it's like technically you're not supposed to tack on anything else to the premium. So you as an agent supposed to broker this. You're just supposed to take on the payment costs without increasing the premium. You go to a steakhouse, that credit card charge is typically built in that steak. But why can't they build it into the premium these days? That's another thing that we've been monitoring, which is really interesting in the insurance world is the I don't want to call them the cartel, but the payment companies or the credit card companies in terms of what they're going to allow you to surcharge and what they're not going to allow you to surcharge, and how does the insurance laws keep up with that? Luckily, we have teams of lawyers that figure that out for us. But yeah, that's another
Something
soapbox.
else far over my head.
Yeah, yeah. Well, I'll say this. So kind of bringing it back to like what you were saying about, all the different ways and like the common experiences that you're having at Peloton. Well, people want to have those same experiences when purchasing insurance, right? I mean, and that's what we're focused on doing. How do we solve real industry issues as it relates to payments, money movement within all segments, starting at the agency segment all the way up from the wholesaler to the carrier, and doing so in a strategic way. Like we've always focused on matching the agency needs first before building up to the MGAs and the carriers. And then on top of that, how do we provide an experience that 10 years from now people are going to expect when they purchase insurance? But let's get started now, and then being able to bring premium finance along for the journey with that. Because again, I always tell people all the time, like, if you think that the main experience of premium financing is going to be through a premium finance company's website in 10 years, I mean, I'm not saying it's not going to happen, but I would say the majority of experiences, are going to be integrated into where people want to work, whether albeit that be a payments platform, that be a core PNC platform, directly the agency management system, obviously. That's where the main experience of premium financing is going to be.
No, dude, it's not even going to be there. It's going to be at some point, and I know that the guys at Glove Box are going to lick their chops, but I'm actually thinking across broader things than just the fact they have an app for this. It's going to be inside of mobile apps too, man. I mean,
yeah, absolutely.
you've got Glove Box, you've got Insurance Agent app. It's not, people are doing it more and more over their phone, and it's interesting to me, even I don't know how they do it. I don't know if it's through deep linking or what, but anytime I'm online,
Yeah.
Specifically on my phone more, shopping, and somebody has a Shopify store, and I have checked out using Shop Payments.
Yep.
At least once, right?
Right.
Now, every single time I go to a store online to shop and it's powered by Shopify with Shop Payments is an option, it's automatically going to prompt me to log into my shop account. Whether I want to or not, it's automatically going to do it. So it provides you, the processor, a lot of control, or I shouldn't say control, but a lot of opportunity to pick up business you might not otherwise pick up if you're in an environment where there's more than one way for somebody to process a payment too. Does that make sense what I'm saying?
Absolutely. Yeah, it's just another distribution channel. And yeah, shout out to Ryan and all those guys at Glovebox. In fact, I just signed up for Glovebox as a customer now. I'm now, and don't take offense to this, Dave, I'm now a customer of Vonna Copeland.
You should be. She's way better than I am.
And so I got my Glovebox link, and I was like, damn, we got to get Ann done in there. So, but yeah, you're absolutely right. So it's just but to that point, same concept, just another distribution channel for where payments and premium finance can go, right? So you have to be technology, have the capabilities to be able to meet the consumer there, and that's what we're doing, right? That is really our big focus, is preparing for that piece versus here's a URL, redirect, or if you want to go here, type in this website and, go here, make a payment. But how do we meet? How do we meet where the consumer, where the consumer wants to be, meet them where they want to be? So that has been our focus, man. And like I said, and done, it is confusing, but just real simple. It is the payments company that powers all payments for IPFS. And we now have a separate go-to-market strategy because we have a ton of customers that say we want nothing to do with premium finance. We don't do any premium financing. We've been using Stripe and we run X amount of transactions a month. This is what we need. We see a lot in carriers, right? The carrier space. MJ, like, don't talk to me about premium financing. That's not our focus. We need a robust payment infrastructure. Okay, so and done is there to meet them versus now we have this huge distribution channel with IPFS, people who have, know the goodness of IPFS premium financing and say, well, hold on, you're doing payments too. And now we have those people coming through that door as well too. So, and then back on the and done side, I throw out that big MGU I was talking about. They're like, wait a minute, let's focus on payments. But phase 2 is I want premium finance somehow to be. So now we got people coming to premium finance through the payment store. So we just opened up both doors, one on the and done side, one on the IPFS side, and doing all things payments and premium financing. But doing it, like I said, strategically, not convoluting things over at IPFS and trying to build payment solutions over there when they should be focused on premium finance. Having everybody focus on their core competencies. So that is vertically integrated. Our buddy James Jenkins, that's what he likes to. He's like, man, he's like truly vertically integrated, not integrated to something over here and integrated, like truly vertically integrated. One thing, one service infrastructure to manage all payments and premium finance, but with all of the things that you would expect from a payments company and all the things you would expect from a premium finance company. Because I think that's been some of the shortfall, to be honest, in terms of like some of the stuff we've offered. People looking for a robust payments experience come to a premium finance platform first, and like, wait, I want to do payments. I don't want to start here with premium financing. So we've addressed that now. So that's fine. If that's the case, here's our payments platform.
Well, I think that probably is the case for the majority of the technology in the insurance industry to begin with, man. We start by solving one problem, we uncover other problems or nice to haves along the way, and then it kind of gets bolted on, and it's very rare that it ends up in a very nice streamlined product that that's vertically integrated and seamless to the end user. Most of the time it looks like you started out with one thing and it just kept bolting things on as you went.
Right.
And I mean, if I'm looking at this from an logical standpoint, you got 90 freaking developers, dude. It better be seamless. It better look right. That's a lot of bodies to pay to make sure that it's turning out the right way, man. And I mean, I bring that up because I don't know of anybody else out there that has that many developers working on a single solution for our industry right now. That just speaks volumes as to IPFS and Dunn's commitment to what they want to bring to the independent agent. That's a huge investment, man. Developers don't give you a return right now. They give you a return years down the road. So you guys are sinking a tremendous amount of capital and really taking a pretty big bet on this thing turning out the way you want it to turn out. Otherwise,
well, to your point earlier, it's like, how do you get all 90 of those people to be on the same page and not try to like stray? Like that's for sure got to be an issue.
Well, no. So to be honest, like that's been the beauty, like structuring and done as a separate company. That's how we get it done. Because again, we have a payment specific roadmap. Now there are IPFS elements that get interwoven into there that, hey, IPFS, we need you to do this in order for our thing to talk to you. Right. But otherwise, like I said, we have the concept of like developer pods. We have pods that are working on strategic initiatives. We have a certain allocation that are related to just continuous enhancements that come through. And then, a certain percentage related to any bug fixes that need to happen. So, right now we have development heads down working on things that we know, are Q3, Q4 this year. Obviously some things we're about to turn around, and then like a percentage that are constantly taken in, because we're constantly getting feedback through the door of, everything from increasing logo sizes to rearranging some, input fields. But to be honest, guy, it has stayed pretty structured just because of the way we have structured the whole thing. Where it gets, what we avoided was trying to do everything within IPFS, and then, okay, well, as a developer, I need to work on this thing on the premium finance side, but then we got this payments thing going on over here. Right now, all of the IPFS development can just focus on, like I said, building the best loan management, premium financing experience on that the industry has to offer. Whether that's through just via APIs, or whether that is through enhancing what IPFS has to offer on the front end. Right, that prioritization is constantly happening. But right now, like I said, we have essentially we have two companies that are building to a strategic focus. But it's just a deep integration. You get the best of both worlds. The thing that always annoys me, and this is where because we hear it in the field all the time, because I will give shout out to some of the competitions that's out there, and especially some of the newest competition, because that is who really pushed, I would say, IPFS over the innovation side into really maturing and done and what it is today. But where I do get annoyed, and I heard it today. Hold on, I'm gonna pull it up real quick. I get so annoyed with this. And I just say, get me on a call for 30 minutes. Let me just show them what they don't know. Here we go. We had an MGA InsurTech say this today about IPFS, but they don't know anything about Andun. They don't know anything that we're doing. You know, they're on the on the back end. I'm not going to mention the competitor, but they have a proper engineering team and culture backed by top venture investors. That translates to a pretty slick product that I've seen many times. They're industry leading in digital payments, and IPFS would be playing catch up with a culture where recruiting top engineers is quite difficult. So now what they're basically saying is you're a dusty old premium financing company that does nothing about premium financing, big ship, small rudder. This is a company that's doing stuff in the payments industry that you probably can't. It's going to take you a long time to catch up. But again, they have no knowledge of Andun. So this kind of comes into the whole marketing bit of, you know, we are now ready to get the word out about how Andun can really help the IPFS image, as well as IPFS helping the Andun. IPFS gives Andun validity, and Andun can totally help reimagine that image of what IPFS is.
Cool.
What we miss, man?
Man, I think I'll tell you, like I said, Andun, the lesser known story in the industry, but that is rapidly growing. I would say we have to be the fastest payments growing in the industry. I don't have the data to prove it, but in terms of, I know the numbers, and I would tell you what you'll see from us over the next, you know, starting now, I would tell you, in the next couple of years is strong marketing push, because in a year and a half, we feel like we've caught up to the industry, the payments industry, through Andun, but able to do so with, you know, the backing of the brand equity of IPFS. So, and I'm tired of people saying that IPFS is that, right? Is the dusty old premium finance company. I would say they had the foresight to create this separate payments company to be, like I said, a conduit of innovation to kind of help them get out of their own way and create something that is going to last for the next, foreseeable future. Everything's accelerated this year. I want to say the next 50 years, but that's that's 300 years in data speak probably. But yeah, that's it, and done. The next thing in payments, if you're looking for a vertically integrated product that can do all things payments, premium financing, and one person to call for all things servicing, you know where to find us.
There you go.
Real quick, what is the website? Is it andun.com?
Yeah, andun.com. I mean, when I say that, and that's been the most interesting story too. And I know we're not running out of time, but we've had to build a startup within an established company. You know, we did all of our rebranding. Our marketing site just went up. I mean, it has been a completely different, company journey within an already 40-year, almost 50-year-old established company. And that's
it's interesting though, man. That's not that uncommon depending on what segment of industry you're in. Like I do a decent amount with Department of Defense contractors, and I see companies like Northrop Grumman and Harris and some of these others, and the amount of technology transfer that's spawned out of those companies. They actually have funds. Like so let's say they've got a chase that's working there, and they come up with a great idea, and it doesn't necessarily fit the vision of the overall corporation, but it's still a really good product or idea or technology. They'll give these people seed money or venture money out of their fund to go start the company. And next thing you know, they've got 10, 12 different technologies that have spawned. You see it a lot in pharma too. Because the thing is, what's the point? You see it in pharma to a certain degree, but more often than not, you almost see it in the reverse, because I feel like a lot of those companies don't invest heavily in R&D when they can let somebody else take the hit on their own nickel. You know what I mean? So how many good ideas does a scientist really have that they can execute on and get to market? Like how many novel drugs is one person going to invent? Probably not as many. So they'll let you go out, start your own company. You take the venture funding, you work all the kinks out, then they'll come in and acquire you. So they don't have any of those costs. but you're kind of doing it the other way where you're just bootstrapping it in-house with the existing company and creating that technology under your own roof. So
Yeah.
it's a different way to go at it. Not saying one's right and one's wrong, but you see it kind of a couple of different ways out in the marketplace.
Yeah, no, I mean, that's I laugh. I think at one point, I think I had like 130 something odd decks where, essentially they were internal pitch decks to getting to where we're at today. Over this 2.5 year journey. And now we're full throttle down, with, full on commitment that, again, we want to be the biggest payments company in the insurance industry. I mean, that is our vision. So, again, it's going to be, we know it's a long journey, it's not going to happen overnight, but we're off to a good start.
Sweet.
You guys have never met in person before, have you?
We haven't. I was
Oh.
trying to remember last time we did this, you weren't on, Kyle.
Yeah.
No, and he wasn't in Key West last year, and that was your first year, but he is going to be there this year, so you guys can have a in-person reunion.
Yeah.
Let's go.
Yeah, I'm excited for QS, man. I'm looking forward to that big time. It sucks not being able to go, but baby
Not
takes
bad,
priority.
Yeah. I get it. I got some on my.
But he's one now, so he can just chill by himself.
He's self-sufficient. Yeah. Yeah. Let him drive himself to daycare. It'd be good.
Exactly.
Yeah. Well, no, man, I'm looking forward to it. Key West is going to be a blast, man.
Yep.
I'm excited. I'm actually flying solo this year. Katie's not coming this year. She's got we're gonna be actually in Perdido Key like the week right before Key West, and then she's got severe mom guilt on leaving the kids like another week in a row. So I'll be flying solo this time.
Cool. Looking forward to it.
So are you flying from Perdido?
No, I'm coming back for like a couple of days. It's like 2 or 3 days in between, and then
I was gonna say, because if you were flying out of there, you could just jump on Silver and get there pretty easy.
Man, I've got to have this Silver experience. You bring this, like everyone's like talked about the Silver. I just want to.
It is an experience.
I need to fly this Silver.
All it is it's the old Continental Express, man. It's a nice Saab turboprop that gets you down there an hour, wheels up to wheels down.
Really? Okay. Yeah, I've heard. No,
God, I feel like it's less than that, isn't it?
It is, but I just say that so if I'm wrong, people can't come back and blame me for helping them make a decision. I feel like you get down there.
I feel like it's dude. I feel like you're literally in the air for like 34 minutes.
Can't even take a nap.
That's awesome.
No.
That's why I like to fly. No naps needed. Just get me where I need to go and get me on time. I'm good.
There you go.
Yeah, man. June will be the month of Florida for me for sure. So
sweet.
Well, listen, we're going to let you roll, man. We got another one we got to record, but appreciate you coming on. Appreciate the update. People, listen, if you are still struggling with legacy premium finance companies and you think somehow they're helping you out, the money you're losing in productivity and efficiency is offsetting any kind of spiff you're getting. You need to reach out to IPFS and Dunn and see how they can come in and modernize the tech experience for you and your clients. We'll catch you next time. See ya.